What if one property purchased today could generate income for the next 20 years? That's the power of real estate investing. Every day, investors search online for investment properties for sale, hoping to find the deal that creates passive income and long-term wealth. But here's the truth most beginners never hear. Not every property is a good investment. In fact, many properties lose money if they're chosen incorrectly. In this video, we'll break down how to find profitable investment properties for sale, how experienced investors analyze deals, and the strategies that help beginners build their first real estate portfolio. Let's get started. Real estate has created more millionaires than almost any other asset class. And the reason is simple. Real estate offers three powerful wealth engines. First, rental income. Second, property appreciation. And third, tax advantages. When investors search for investment properties for sale, they aren't just buying buildings. They're buying long-term income streams. There are several types of investment properties for sale. Single-family homes are the most common for beginners. Multifamily properties allow investors to collect rent from multiple tenants. Commercial buildings can generate higher returns but require larger capital. Vacation rentals can produce strong cash flow in tourist locations. Each property type has its own risks and rewards. Most beginners search popular real estate websites, but professional investors look elsewhere. Some of the best investment properties for sale appear in places like foreclosure listings, bank-owned properties, real estate auctions, and off-market deals. These hidden opportunities often offer better prices and higher returns. Professional investors often use a quick formula called the 1% rule. If a property costs $200,000, it should ideally generate about $2,000 per month in rent. This rule helps investors quickly filter thousands of investment properties for sale into the most promising opportunities. In real estate, location can determine the success of an investment. Look for areas with growing populations, expanding job markets, and new infrastructure projects. Cities with strong economic growth often offer the best investment properties for sale. Cash flow is the money left after all property expenses are paid. These expenses include mortgage payments, maintenance, property taxes, and insurance. Positive cash flow means the property pays you every month. Negative cash flow means you're paying for the property. Most investors don't buy properties with full cash. They use financing. Common methods include traditional mortgages, private lenders, and investment property loans. Financing allows investors to purchase multiple investment properties for sale using leverage. Another strategy is the fix and flip approach. Investors buy undervalued homes, renovate them, and sell for a profit. Many distressed investment properties for sale are ideal for this strategy. Rental properties are one of the most stable real estate strategies. Investors purchase homes and rent them to tenants. Over time, rental income pays the mortgage while the property increases in value. Short-term rentals have become extremely popular. Vacation rental platforms allow investors to generate higher nightly rates compared to traditional rentals. However, regulations vary by city, so research carefully before buying. Short-term rentals have become extremely popular. Vacation rental platforms allow investors to generate higher nightly before buying any property. Investors calculate return on investment. This includes cap rate, cash-on-cash return, and long-term appreciation potential. Analyzing these metrics helps identify profitable investment properties for sale. Rates compared to traditional rentals. However, regulations vary by city, so research carefully before buying. Like any investment, real estate carries risk: unexpected repairs, market downturns, vacancy periods. Smart investors plan for these possibilities before purchasing. The real magic of real estate happens over time. As mortgages decrease and property values increase, investors build equity and long-term wealth. Many successful investors simply buy and hold investment properties for sale for decades. If you are just starting out, focus on buying one property first, learn property management, understand rental markets, then reinvest profits into additional properties. The real estate market changes constantly. Interest rates rise and fall. Housing supply shifts, rental demand evolves. Understanding these trends helps investors identify the best opportunities. After gaining experience, many investors expand their portfolios. They acquire multiple rental homes, apartment buildings, and commercial properties. Diversification can reduce risk while increasing income potential. With global populations increasing and housing demand growing, real estate remains one of the strongest long-term investments. Investors who learn how to identify profitable investment properties for sale early often build significant wealth over time. With global populations increasing and housing demand growing, real estate remains one of the strongest long-term investments. If you enjoyed this video and want to learn more about real estate investing, make sure to subscribe to the channel for weekly investing strategies and property insights. And tell me in the comments what type of investment properties for sale are you most interested in: rental homes, apartment buildings, or commercial real estate? Your suggestions help us create better content for future videos. Thanks for watching, and I'll see you in the next video. Investors who learn how to identify profitable investment properties for sale early often build significant wealth over time.